How do you think that increase in premiums is going to affect the market values?
Also, the rents are coming up, and that is a market that could be more affected than the actual purchase and sale market, because the owner of the property is going to, in some extent, repass this new cost or elevation of cost to the renter. So the renter will suffer more than people that are buying.
Hello, everyone. Welcome to a market update with Buying South Florida. Today, we're bringing on Bryan. He's a trusted insurance agent that we work with. And we're also bringing Dan. He's a local real estate expert in South Florida. And I wanted to talk to these guys because there's a big change happening in the insurance industry. Now, this change is going to impact or increase policy premiums, and essentially it will affect how much buyers can qualify for. So I wanted to bring on Bryan to start out with you, Bryan, and just kind of give us a summary of what's happening and what's going to take place in the insurance industry going forward.
Well, thanks, Mario. So majority of the carriers filed for their rate hikes. Rate hikes, you have to file within the state within X amount of period of time. It doesn't just go and take effect when you renew. It has to get approved by the state and then gets implemented in the next year. So these rate hikes will be going to effect pretty much August 1st and throughout. It's going to be Citizen is having a 15% rate hike, and the other carriers are probably going to have up to about 21% rate hike. This has been the current market trends for the last 3 years. You used to be able to insure property for about $3,000. Granted, no, if you had impact windows shutters in 1970s year built it up. Now you're looking at just 4,000 to 4,500 is the minimum for South Florida rates, and this is the price that you pay to go live in this region. So this is going to affect every policyholder. It's not prejudice to those that are just in South Florida, but the whole state is going to get a rate hike. So those in Orlando who get used to paying $2,000 are going to go pay $2,500, and other places in Florida as well are all going to adjust to the current market trends.
Yeah, and I can say, guys, that I'm licensed in the entire state of Florida, as you both are, right? And the policies that I see up north, Orlando, Tampa, Jacksonville, those insurance policies have always been significantly less than the policies down in Miami-Dade. So having an increase of 15% on those premiums down here in Miami-Dade, I just think that that's going to subsequently bring down market prices down here in South Florida. Dan, what do you think of that, man? How do you think that increase in premiums is going to affect the market values?
In a normal market, it would have a big impact, because usually people finance their houses. But the way the market is right now, just to give you an idea, 25% of the whole Miami-Dade County houses are being bought cash. So 25% of the market is cash. If you go to condo properties, that's 50%. 50% of the market, it's cash, and that's happening for one reason. On the house side, a single-family home, the market's so hot that to make a more compelling offer, buyers are just offering to pay cash instead of finance. And people that cannot go that route, they are renting, and that's why also the rents are coming up. And that is a market that could be more affected than the actual purchase and sale market, because the owner of the property is going to, in some extent, repass this new cost or elevation of cost to the renter. So the renter will suffer more than people that are buying, because they are already in townhomes and in condos. 50% of the market is already paying cash. And when you go to the even more luxury property, 85% of all properties, 3.5 million and up, are paid cash. So in that segment, the luxury segment, it should be less affected than the other one. But I see a great impact on the rentals.
Yeah, that's actually a great point, Dan. So Uh, and that brings to light the importance of home ownership, right? It's if you're a tenant and the landlord increases your, your rent to pass on the cost of that increased insurance premium, your rent goes up and you have no control over that. Sure, in your mortgage payment, if the property insurance goes up, your payment also gets adjusted accordingly, but at least it's your property, right? It's your investment, you're planning towards retirement, building wealth over time, etc. So Bryan, do you have any idea if this will go back to, the levels that were before, or is this something you anticipate continuing to rise going forward? Policy premiums I'm referring to.
Well, Mario's, you and I have been doing this for the last 10 years. So for the last 7 of those years, we've been in a soft market. Soft market means I'm going to go and equate that to where the mortgage market or the mortgage industry was 2007 to pre-2008 crash. It was easy to get a loan. You would just state your income, state your assets. You got a credit score. Sometimes you get no verification. Well, in the insurance space, I went from 9 carriers down to 2, and the largest carrier in the state, which is Universal Property and Casualty, which everyone knows, you see policy with them all the time. The one that has the elephant logo on the right. They're the largest carrier by policy count and premium volume. No one writes more than them. They have shut down Miami-Dade, Broward, and Palm Beach County for all new business, for all single-family homes. They started that last year. They started 1976 in newer homes only. Then they shut HO3, owner-occupied. Then they shut down the condos. The condos were a very bad situation for Universal because you would go and pay $750 premium, get $50,000 in dwelling, and you have a water claim for $25,000, and their personnel and the customer paid $800 or less than $800 a year. So you tell me, how does that add up, and how can you sustain that? We're living in an area to where it's very troubling when 1/6 of the population has 43% of all water damages. 1/6 of the population is Broward, Dade, and Palm Beach. Monroe only comprises maybe 100,000 people, so I don't count that. So about 4.5 million people have 46% of all the claims, and the state has 23 million people.
And that's not flood insurance you're talking about.
That's just
right?
Water damage.
Yep.
The textbook definition for water damage is incidental water discharge due to mechanical failure apparatus. That is the insurance ISO textbook definitions. In layman's terms, if your pipes blow and water gets backed up into the house, call me. We'll get your claim settled. Nowadays, the new trend is all carriers now are giving a water damage exclusion or water damage limitation of $10,000, and that's it. Citizens right now is the only one that's giving you full capacity. Or when you get into the luxury market, how Daniel said, it changes a lot. Luxury market in insurance is if you insure the home for $1 million and up. If you insure the home for $1 million and up, you have more flexibility. The premiums are larger, therefore they'll give you full water damage. Do I see that the premiums are going to go back down? No, they're not. They're here to stay, costly, and it's predicated on based if we have an active hurricane season or not. If we have an active hurricane season, prepare for those to go up. Even though South Florida won't get hit, the same carrier that has exposure and rights policies in South Florida has probably 20,000 policyholders in the Panhandle. If they get hit with the Cat 4 and they have to go and pay out claims, everyone else that's inside that pool has to go and recontribute back to the fund. So the state of it's a very precarious state to write insurance. No one wants to touch Florida. No one especially wants to touch Miami-Dade. It's not profitable.
So your first-time home buyer down here, you're saying that you just have one option, which is Citizens, and that's it, right? First-time home buyer market. I mean,
unless your house is built 2002, we are 2021. Unless your house is built 2011 and up. If your house is built 2011 and up, it opens up to 2 or 3 more carriers. You'll get into the pool, and then next year when your house is 10 years old, you're most likely to be grandfathered in there, and they'll keep on continuing. And it depends on the market trends as well. They can give you non-renewal. But if you're buying a 1950s year built home, you pass a 4-point inspection, your roof is 10 years old, your AC is 5 years old, all your components is in good working condition, and it's new. You're going to go with Citizens, and that's it. There's no
you have no
carrier
option.
you're going to go with
and
Citizens.
that, guys, that really affects the approvals for first-time home buyers, especially, right? Because if you take out someone to go see property, they're being pre-qualified, let's say 350,000, assuming a $2,500 a year insurance premium. If now that 2,500 that we're assuming is now 3,500 or 3,000 or whatever that is, their approval amount changes. So that may be showing properties to someone thinking they're approved for 350, and when we go get an insurance policy, that insurance policy could be double, and there goes that approval, right? Because one of the things that we look at as part of the approvals, obviously, property taxes, but property insurance is one of those things that affect your approval amount. So, man, what are some things? I mean, Dan, what are some things that, when you take your clients out for showings and so forth, what are some things that you kind of look out for during inspections, during the showings and so forth, that may help those policy premiums?
Of course, the roof, electrical, and plumbing situation are things that are going to help that, because the better condition the house, the buyer could get a better insurance. But what I can see happening is the person that wants to buy for a reason, is because they don't want to pay rent anymore. So maybe they are going to change location. Maybe they're not going to buy in that location that they were thinking of buying because had exactly the property that they want, but they might go to another location that the price of the property is not so high. So he will figure out, okay, if the insurance is more expensive, I'm going to buy a house that is as good as this one, but the location is not as premium, so the house will cost a little bit less, and we can start seeing other areas of Miami-Dade County and Broward and even Palm Beach to start redeveloping, because they make sense in terms of pricing.
Yeah, and one of the things also that I always advise the clients to be looking out for, and I think Bryan and I have spoken about this multiple times before, age of the roof, right, guys? So if you're looking at age of the roof and hurricane protection, right? If you're looking at, like you said, Dan, electrical, plumbing, things like that. But I think the big ticket items that I always advise clients to kind of just keep an eye on is the age of the roof and hurricane protection. So that can have a really big impact on how much a policy would cost, and that could mean the difference between being approved or not.
Yeah, and maybe because of that, if we start seeing buyers backing out of offers because of that issue, maybe now sellers start to pay attention to their house, because their market right now is so hot that the seller don't care. They just don't care. They just put on. You see pictures on MLS that you cannot believe is $1 million house or a $600,000 house or $7,000 house, because even the agent doesn't care. It's going to be sold no matter what. But now, maybe because of that, the way to get ahead of the market, being the seller, is to actually doing the things that matter. Maybe renovating the kitchen matter less right now, and you spend the same $20,000, $30,000, $40,000 in redoing your roof, because that's going to bring your premium down, and your buyer can actually qualify to your house.
And you can open up the pool of buyers to a bigger pool of buyers if you have lower insurance on your property and so forth as a seller. So that's a really good tip. I think going forward, guys, that we're going to see the market values down here in South Florida kind of adjust a little bit down, because I'm seeing a couple of things that are affecting market, not directly market values, but I'm seeing a couple of things that is affecting the amount of what clients can qualify for, which subsequently will affect market value. Just like Dan said, if you have a property that it's been listed at, let's say, 400,000, right? But now that property insurance went from 3,000 up to 5,000, the pool of buyers that is able to buy that property just got significantly smaller.
Yeah, but at the same token, the inventory is so low that I think the seller will be more time in the market. Instead of selling in 25 days, he will accept to sell in 45 or 60 or 90, but I don't see the prices coming down because the demand is still high.
Okay.
I agree that maybe we will see the prices going up less fast than it's going right now. Maybe the velocity or this the how high is going so fast. This is going to adjust, but I don't see a decrease in listing price or sales. Also because appraisers are getting very aggressive, very aggressive. I'm seeing properties that I don't think they are going to appraise, they are appraising.
Yeah, and I'm seeing on my end a couple of both sides of that coin. Dan. So I'm seeing some properties that we think is going to appraise easily, don't appraise, and then I'm seeing some other properties that there's no shot of this thing appraising, and it appraises. I do think that in comparison to 2008, like Brian said, it's much different now in terms of the requirements for qualifying, the requirements for appraisal, things like that. So I don't think there's going to be a market crash looming or anything like that. I do agree that the supply and demand, because of the demand, will continue to keep the property values high or higher, rising steadily. However, appraisals, the appraisal process is working. I am seeing properties that the properties that should not be appraising over market value have not been appraising, and that it kind of puts me at ease a little bit, because I know the market is not out of control like it was in 2008. I know there's a yeah,
exactly.
the appraisal system is working. Though in some cases we may be wrong, right? Sometimes you think nothing's going to appraise and it appraises, to my surprise. But I do think that the appraisal process is definitely working. I do think that once interest rates start to trickle up, in combination with rising insurance costs, in combination with rising taxes, we will see inevitably a market adjustment. Maybe not necessarily a crash or a dip or anything like that. We'll see a plateau first. Then I do think that we'll go into some kind of a small correction in the market in terms of property values. In terms of like time frame, again, it all depends on how quickly or when the Federal Reserve begins to raise those interest rates. I think that'll be kind of like the turning point for the market. What are your thoughts on that?
Let's put it this way. The inventory of single family homes here in Miami in June 2021 was just over 2,800 houses, 2,800 houses in the whole county. That's right now a 2.2 months of supply, meaning if no house entered the market and none of those that are listed are canceled or withdraw in 2 months, if everybody continues to buy, the inventory is going to go to zero. And that's a decrease of 41% regarding last year. 41%, because people buy faster than builders can build or sellers can decide to sell, because now the sellers are also like this. Okay, I can sell my house that was $300,000 a couple of years ago, and now it's $1 million. But if I sell my house, to where I go, they don't have a place to go. So they are not just putting their house on the market. They are not selling the house on the market. And when we talk about condo, the number is too high. It's 8,400 houses in the market. That's about 5 months inventory. But it was also a decrease of 41% from last year. So at this moment, the combination of factors are in our favor. The interest rates are low. There's still a lot of people moving to Florida. I think that movement is going to continue to happen in the next years, because that's something that was already happened, and the pandemic just accelerated that process. There's still a lot of people from New York that are leaving other states also. So those are all factors that are going to come and play their game. But I agree with you. There is an adjustment of speed to happen, but I don't believe in crash. It's very hard to qualify for a loan right now. It's very hard. A lot of people are not qualifying. And back in 2008, you had the Ninja credit. You didn't have to have an income, a job, or an asset, and you could buy 5 houses leverage with 120% of the asking price or the appraiser price. The bank was giving the money. So it's not even close. It's very hard to compare, this moment with a moment that was so out of the curve that is ridiculous to try to compare. But yes, it's going to be an adjustment, but far from having a crash or something like that.
And the ninja loans, guys, it's short for no income, no assets. No income, no assets loans. I can't believe the conventional loans were that lenient back then. Obviously there was a market crash because of that, but
even forbearance, ending the forbearance right now. I've seen. I have a lot of contact with people in title companies and all mortgage brokers also, and now some banks are coming with a 40-year modification loan. So the guy has his mortgage for 20 years. He paid half, but because of the pandemic, in the last 6 months, he were 4 behind or 6 behind. The bank, instead of doing what they did in 2008 and foreclosuring the person, the owner, they are doing, okay, come here. We are going to take those 6 months that you didn't pay. We are going to include that in your debt. And now your debt is new, but it's not 20 years, it's 4 years. So even your payment may be even lower than it was before, and you still keep paying. So I'm not afraid of those, the end of the moratorium, because banks are not stupid. It's better to increase the lifetime of the client with them than foreclosure to don't.
Completely agree. And I think that's one of the points that we learned from 2008, that it just doesn't make sense to put people out of their homes. It makes more sense, more financial sense, to work with the buyer, the homeowner, and restructure the loan. So what I'm seeing also, Dan, to add to your point, is a lot of those balances that are still due, they're moving it to the end of the loan. They're keeping everything as is, but they're moving the balance to the end. That's preventing people from going into foreclosure, preventing people from having to short sell their properties or even sell their properties to get out of that. So that's a really big change, improvement, in my opinion, that was made to the real estate market. So completely agree there. And Bryan, going forward, is there anything that you can point out, or maybe some tips to buyers and realtors to be looking out for, just in terms of what areas will be higher than others when it comes to premiums? Like if a buyer is debating whether to buy in South Miami versus South Broward, for example, are there any tips that you can give clients, home buyers, for keeping their premiums lower?
Yeah, the big thing to look at is coastal properties is considered 2 miles of the coast. Okay, so coastal properties or anything east of 95 is a high risk area or high velocity area. So therefore, or if you're out with your realtor looking at properties, you want to make sure that the home is either high impact resistant windows or shutters, so your price is not very expensive. And if the roof was done permitted from 1995 and beyond. If a roof was done in 1995 and 1996, it's the same price if a roof was done.
And it needs to have permits, right?
Yeah, it has to be a permitted job. It's to be a permitted job, so you get a discount there. And then going back to the opening protections, which every window and door has to be covered up by either a Miami-Dade County approved shutter or a Miami-Dade or a hurricane impact window or door. Either or will give you the same discount. Either a shutter or an impact window gives you the same discount. So those are the key things that you want to look at in order to go and bring the cost of insurance down. There's also you're built a house that have any homes that are built in the 70s and newer they are modeled better. So therefore pricing on that comes out better in terms to a home that's built in the 50s. The insurance carrier will hit you up with a surcharge just for the simple fact it's built in the 50s, even though it's in the same neighborhood. And despite you having a very good 4-point with all the appliances brand new. So those are the things you want to go look at. If you're east of 95, it's not the end of the world if you can actually split your coverages. So what I'm doing in the house that you're doing my loan for and that Danny's selling to me now in Oakland Park, I'm going with Citizens for the wind component because the house is totally mitigated, opening protection throughout all the openings, and the roof was done 2006. So I'm paying just for windstorm alone $900, and it's east of 95.
Brian, taking all of the other variables in consideration, excluding the variables, what gives the owner a better discount if he has a coastal property with wind protection, with all the impact windows and everything, or having a property west of 95? What will help him more?
Well,
General terms, this is very hard to give, but in general terms, what will give you a better discount?
well, if you're going square footage by square footage, if you're going year built against the same year built, and he's just
Same
making
house,
it,
let's say it's the same house, same model, built at the same year, the same structure, everything, but the coastal one have
non-coastal properties have a little bit better pricing. Now, some areas are non-coastal, like Coral Gables, Shenandoah, and Kendall, and their prices are not all the best if the house is not completely mitigated. So it depends on you generally do have better pricing when you are west, when you're non-coastal, when you're west of 95, your pricing does come out more favorable. Not in all cases, but the overwhelming majority, yes. Now, it's not to scare people who live east of 95. People who live east of 95, they have a luxury that people west of 95 do not. They're in a wind pool area, so therefore they can go to Citizens for the wind component of their insurance, and they can go to a private carrier that wouldn't cover them before, but they can drop the wind with the private carrier and just say, insure me hazard, excluding wind. Therefore, you'll get a combined premium like how I'm getting on my house for, somewhere around $2,800, which is great. So I did that by splitting coverages. When you go west and you have a house that's probably not mitigated completely, and it's the same house, but you go west, you're going to pay more than that price because I'm giving a higher risk to the government. You're not going to go and charge me that much because the home to them is very protected. And not anyone, but a lot of people would pick up the hazard insurance for a house that it's in the coastal area, as long as they don't touch the wind component, and they'll pick it up. So that's a saving grace for everyone that's east of 95. They're able to go and split the coverages. Where the guy right the other side of 95, he doesn't have that luxury. He has to go with one carrier and that's it. Citizens won't split it. And right now, in the market conditions, there's no private carrier that's going to go and insure you for wind or wind only. Before we had that, Mario, a couple years ago, you can find a private carrier give you a wind only. The price now is egregiously expensive. You're going to go to Citizens for the wind. Citizens is the player that you're going to get your wind insurance with.
So one last thing before we get out of here, guys. Brian, do you anticipate more insurance carriers coming back into the South Florida market?
No, not for the next 3-5 years. No.
Okay.
It's not profitable here. And the reason why it's not profitable, aside from 46% of the water damage claims coming from 1/6 of the population, okay, that's one big factor. This area has a factor that a lot of areas in the other states don't have as much, and it's the hurricanes. And the hurricanes come from every June to November. Remember, before an insurance carrier comes in, Mario, that wants to be a new player, there's two systems or two models that exist. I don't have the name of them on top of my head, but I think one is called SAMS and the other one's called something else. So these two models are a proprietary insurance software that you would go in and say, hey, I want to be able to go and enter the market. How do you foresee the forecast of hurricanes, water damage claims? You pick what loss, you pick what kind of exposure or peril that you're worried about against. And that carrier will tell you based on, and that system will tell you based on that zip code or in that territory, what's your probability for claims, how much you should charge in premium if you want to enter that market. So it costs about anywhere from 150 to 250,000 two model territories. So aside from that, from the egregious cost, it's any carrier. This is tested to and through. Universal's the biggest carrier in the state. They pulled out for a reason. When they did that, I said people are going to follow suit. The largest carrier by premium count and volume, by policy count and volume has restricted and will start pulling out. You can watch all the others guys pulling out. So they started pulling out, and there's no light at the end of this tunnel. Citizens has now came back to be the #1 go-to carrier. They stopped for about 5 to 7 years. You remember that? You haven't seen Citizen. How many Citizens policies you're seeing coming across your desk?
All
Way
of them.
more than usual.
It's like 95% of all policies. are
Okay,
Citizens.
and before you haven't, and a couple of years ago, you stopped seeing them. No one wanted to write with them because the market softened up. Well, we're back to that. Citizens has gone to the main carrier now. We have nowhere to go, unfortunately.
Well, thank you guys. Very, very insightful, very good information. I'll leave both of these guys' contact info below, guys. I hope you found this video useful and helpful. Bryan has a wealth of knowledge in insurance, as has Dan in the real estate market. So thank you guys, and until next time, appreciate it.
Thank you very
Thank you,
much.
Mario.